Let's start a company. We're going to create a new company in QuickBooks Online. We're going to call it Nerd's New Company. For those of you who don't know, I'm often referred to as Nerd because of Nerd Enterprises. So, Seth at nerdenterprises.com. We'll skip the phone numbers. We'll skip all the stuff that's not absolutely required. Now, I'm accessing this through the accountant's portal, so I get wholesale billing, and so it's half price. We'll go with plus. And we're going to make me the master admin. So you're not necessarily going to see that. You'll have something similar if you're starting a new company in QuickBooks Online. We're talking about the basics of bookkeeping. And if you read the write-up, and hopefully you read the write-up, and this brings up my list of clients. Let's go into Nerd's New Company. Hopefully you read the write-up and got the picture. It's no longer about entering financial transactions. That's the old definition of what bookkeeping really is. We're going to say less than a year. Next. And I'm going to say all set. Bam. So I like that. They used to make you kind of go through a little bit more. There's a few things we need to kind of be aware of at the beginning, right? The chart of accounts is one of them. But first, going back to the history of bookkeeping, we're no longer entering financial transactions. I gave you the scenarios. You really should read the write-up if you haven't, so you'll have context for what I'm talking about. You have to babysit the data. You have to manage the flow, but we're not entering anything. So that's one thing that's important to recognize, I think, when we're talking about bookkeeping in today's world. And today's world consists of automation, lots of it, and it's going to get more. There's going to be more and more automation as we go along. So the chart of accounts is what I like to describe as the backbone of your bookkeeping. It's where all the transactions live, right? And your chart of accounts is made up of the accounts that appear on your balance sheet, which we looked at, and on your profit and loss statement, which we've touched on but haven't looked at specifically and solely. We looked at the statement of cash flows and we looked at the balance sheet. The profit and loss, most of you get. It's got your income, the money that you've made or earned, and it's got your expenses, the expenses that you've incurred and have to pay. So that's our chart of accounts. Now, the first thing we're going to want to do is create a bank account, right? Because again, as you can imagine, especially given the scenario I just described, everything is very sort of bank account centric. You know, it used to be I could sort of run the bookkeeping of a business without necessarily having a bank account when things were more manual. But now it's automated and it's all through the banking. So we're going to want to go into the banking area here, and you're going to want to connect it to your bank account. Now, this is a sample company, so obviously I don't have a bank account to connect it to, but normally this is where you'll go to do it. So in the meantime, I'm just going to manually add in a bank account, right? And what I did was, let's go back home just so we're clear. If you go to transactions, you'll see your chart of accounts option within that. And then I'll choose new, and the type is going to be bank, and we'll just say it's the checking. Usually I like to name these 1, 2, 3, 4, and we'll say save and close. So now I have a bank account set up. Now, if I wanted to, I could go to banking here, and instead of connecting the bank account, we can click here where it says upload transactions manually. And you can import an Excel file. It actually works really well. And it treats it the same as it would if you had actually downloaded the transactions from the bank. So that is possible to do if for some reason you can't get your feed set up right away. But normally just understand that you're going to create the bank feed. It would be crazy to be using QuickBooks Online and not do that. So what else do you need to know to kind of get started? Now, let's say the first thing I'm going to do when I open up my account is I'm going to open up the bank account. And let's say I deposited $10,000 into the bank account to get it started, right? So we're going to click here on the Quick Create button. And we're going to click to create a bank deposit, and it's going into that checking account. And let's back it up and say we started it on the 1st of the year. And this is one of the few times where you use an account called actually, don't even use opening balance equity. Never mind. Let's call this shareholder contributions. So I can type out the name of the account that I want to code it to, and if it doesn't exist, it's going to ask me to add it. This is what I mean. So it's very easy to create what you need on the fly. I'd rather do it that way. This way I'm only creating the things I need. Right, and we'll call it partner contributions. I don't have, it should say shareholders, but I may have skipped the part where I told it what kind of an entity I was because I went through it so fast. So Normally, I would have said I was a corporation and it would be shareholder contributions. So I must have gone so fast that I missed that part. Anyway, so now I'm getting to start the bank account off with $10,000 in it. And I'll say save and close. And let's go run a report, because you know I'm a big fan of reports, right? I want to see what that looks like. Let's go with this year. This year to date, run. Boom, there's a checking account with $10,000 in the shareholder contributions account, right? Beautiful. Let's do something real quick, because now it's kind of bothering me. So if you made the mistake I made and you didn't really kind of take the time to decide, I guess nothing's been chosen. So if I just say here, corporation, one or more shareholders, I'd choose that. And I could say accounting, tax preparation, or bookkeeping for my industry type. And somehow it thinks I was split in two and working on it at the same time as I was working on it. So let's refresh and see what took and what didn't. Okay, we'll try that again. Corporation, accounting, save. Fantastic then. Now this says Form 1120. Let's do small business, S Corp. That's what most of my clients are. We'll say done. Obviously, you're going to want to find out what kind of entity you are. If you don't have one, then you're a sole proprietor, and that's what you'll choose. But the type of entity drives very substantially the nomenclature of the accounts in the equity section specifically. So if it's a corporation, it's shareholder. If it's a partnership, it's partner. If it's an LLC, it's member. You know, so the nomenclature changes, but the concept, how it works, is exactly the same. So notice I've got my $10,000 in the bank account. Now I've got what I need to start a business, right? Now we can go out and we probably, want to get some office supplies, right? So let's write a check. Let's say we're going to swipe the debit card, right? So in QuickBooks, there's a distinction between an expense and a check. So if it's not a check with a check number, then you'd normally choose expense, right? And let's say we went to Staples, and here's where I get to add Staples on the fly. Again, I don't need to sit here thinking about what vendors do I need to add. I can just add them as I start to record my transactions. The main thing is get the transactions recorded. Again, very bank-centric. If you get your bank account caught up to date, then you've covered most of it, most likely. The only things you'd have to cover additionally would be, for example, expenses you paid out of your own pocket with cash. And that's another topic for another video on another day. Now we'll type office supplies as the account. And again, it's not on the books yet because we started it with a pretty bare bones chart of accounts. So we're going to add it. And this is going to be an expense. And there's probably office expenses here as the detail type. You have to choose a detail type, and do make it a point to choose one. You don't want to just sit there having everything going to advertising and promotional. So make sure you take the second that you need to scroll this list and choose the most appropriate thing. Save and close. And let's say we spent $150 on office supplies. And save and close. Okay, now let's look at that balance sheet again. I'll just run it for all dates. Right, so now we spent $150, and notice net income flows over here, and I've covered this in previous videos. So if you haven't already, go back and watch my last two videos. Net income for the period flows over to the equity section of the balance sheet. I just spent money on office supplies. That's an expense. I have no income yet that I've recorded, so I have a net loss for the period. Let's see what that looks like by running the profit and loss. Again, I'll just run it for all dates because it's easy. I have my one expense for $150, so my net income is a loss or a negative $150, and that's why that flows to the balance sheet like that. So it starts to fill in as you begin to create the transaction. So there's a few things you need to know. You need to know that there's a customer list here, and that's how you'll track your income. And I mentioned in the write-up, you have to think about how your business flows. What do the operations of your business look like? How does a customer come in the door? How are you going to get paid by them? Are they subscription-based? Even though I'm an accountant, most of my clients pay me on a subscription because we charge a flat monthly fee, and they just, I have them put a credit card up, and it charges their credit card every month. And this way, we don't have to worry about payment. I can focus on getting the work done, right? So you have to think for your own business about, how am I getting paid? How am I getting my money? Do I need to invoice people, or can I set up subscriptions? If I set up subscriptions, do I want to send them an invoice? I don't. because they get a receipt from my website that confirms that their payment went through. So I don't, if a client asks me for an invoice, I'd be happy to send it to them, but I don't necessarily, I don't need to. And I think we're going to find more and more as time goes on that there's going to be less and less of a need for invoices for this very reason. Most of us are going to be able to capture payments automatically monthly. Now, if you're billing your clients, then of course you need to create an invoice. And before you can do that, you'll need to create a customer. And it's as simple as going to the customer center and creating new customer. And you can fill out all this information, and you probably should, but for now, let's just call it Always Right. Okay, so now I have a customer called Always Right, and I can produce an invoice for them. It's that simple. But now I'm going to produce an invoice, and that gets me into, what am I invoicing them for? What kind of a service do I sell, or what kind of a product do I sell? And again, I don't have to sit there creating the whole list all at once, because even from within the invoice, I can say, oh, well, I'm selling accounting services, so let me add a new one, and we'll call it a service, and we'll call it accounting services. Right, and here it's automatically linked to the income account, accounting fees. I have no other income account on the chart of accounts yet. One thing you can't do is from this screen, no, they haven't changed it. You cannot create a new account on the fly here. So you have to have created the account that you're going to link your item to before you create your item. Sometimes what you can do, like let's say I wanted this to go somewhere else, is I would save this, go create the account, then you can come back and edit this and change it to whatever income account it needs to be. Let's say save and close, and let's say charging them $1,000 for my accounting fees for this invoice, right? And if I have their email, I can put their email in, and I can hit save and send, and it sends them an email. And the really cool thing is, so let's put in my other email, Seth@SethDavid.com, and let's send it. What's really cool is QuickBooks has a built-in service called QuickBooks Payments, which you can use to capture payments online, and it makes it so easy for your customers to pay you. It's ridiculous. And you always want to check off the bank transfer option, because that gives them the opportunity to pay you via wire, and I think it costs all of like 50 cents if you do that. So let's hit send and close. And the email went out to me, but now I've got to set up the service, right? So you do have to go through a bit of a process. It's very fast though, but you do have to set up the service so you can actually accept the credit cards. Let me close this, because obviously I don't want to actually set that up. And the next thing you'll want to do once you've posted an invoice is you'll want to get paid from the customer, right? So again, the plus sign or the quick create, and under customers, we're going to receive payment. You've seen me do this stuff in other videos, but I think now you have a little different context based on what it's like when you're actually creating a brand new company, right? So we're going to choose Always Right as the customer who's paying us. The payment method, we'll call it wire. And since it's not already in the list of payment methods, we'll add it. Or we might want to just call it EFT, right, for the QuickBooks Payments. Or we might want to call it QuickBooks Payments, right? Or I think it's Intuit Payment Solutions. The point is, you can call it anything you want. I call it MUD. It really doesn't matter. I'll click Save. It's just so I know how they paid me. And a lot of times, I don't even care as long as the money got into my bank account. And let's hit Save and Close. And one last thing to do, I actually forgot to check. Where's that payment going? In this case, it was deposited straight into the checking, but let's say I had 2 or 3 checks that needed to be combined into a single deposit that were payments from different customers. Let's go back here. We need to go to our chart of accounts, and we need to create a new account. And we'll just call it Other Current Assets down here, Undeposited Funds. And then it kind of updates the name as you do the detail type. Save and close. Now what this does, let's go back to our payment, is this allows you, if you wanted to, instead of depositing this straight into the checking account, is you can deposit it into undeposited funds, and then you can receive 2 more payments from 2 other customers, or even other checks from the same customer if they paid by check. You can receive them each separately into undeposited funds, and then we can deposit the whole lot of them together in one deposit. This way your deposit total here matches your deposit total in QuickBooks, or on your bank statement, I should say. Meanwhile, assuming this was paid via Intuit Payment Solutions, this is going to be the whole amount. And then they're going to charge a fee, right? So there's going to be a small fee if they paid with a credit card. So let's just write a check real quick. Right? Or better yet, let's do it as an expense because it's not really a check. Right? And the pay is going to be Intuit Payment Solutions. And I would call this payment processing fees. Right? And this is going to be an expense account. Right? So you just want to look to see if there's something in the detail type that describes it specifically. If not, we'll just use Office General Administrative Expenses. Save and close. And you can change that later if you need to. Now I honestly have no idea what rate they charge. Let's just say it's like 1%. You can do the math right in here, by the way. So it comes out to $10. I'm pretty sure it's even less than that. The fees are like nothing. It's like pennies compared to what you get paid with Intuit Payment Solutions. And we'll say save and close. Right. Let's run a profit and loss. So we've earned $1,000. We bought office supplies of $150, and we incurred processing fees in connection with getting that payment of $10. So we have a profit of $840. Let's run our balance sheet. We have $10,840 left in our checking account, right? Because we spent some money, but we also got some money. And here's our contributions of $10,000, and here's what we earned. We made a profit so far of $840. That, my friends, are the basics of getting started with QuickBooks Online and the basics of bookkeeping to get you started. This is what you need to know. Using QuickBooks Online as a software example, because that's what I use. So, my friends, as always, if you have any questions, comments, concerns, or feedback, reach out to me. Post your comments below. If you're watching this on YouTube, subscribe on YouTube. If you are on the website at Fundera, then congratulations. Post your comments below. I'd love to get them. I'd love to get your feedback. I'd love to respond and answer any questions, help you in any way that I possibly can. As always, I hope you had some fun here and learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.